3M is a beloved dividend growth company and is splitting ways with their healthcare business. Now, 3M has paid uninterrupted dividends for over 100 years and has increased that dividend for 64 straight years, making them a dividend king. Hey, what's up? I'm Russ. Now, we briefly covered their food safety business spinoff in another video, and in this video, I'm going to give you my brief thoughts and fill you in on what's going on with their healthcare business spinoff. And dude, what is up with 3M and all the splits and spinoffs? I mean, there's more stock splits and spinoffs going on than I've got lines developing in my forehead. And what better place to start than with their CEO, Mike Roman, giving us his thoughts on why they're doing the spinoff.
It's about creating more opportunity and greater certainty. And the opportunity comes from the announcement of our planned spin of our healthcare business, resulting in two world-class companies, a leading healthcare technology company globally, a global leader in material science innovation, leading in facing highly attractive end markets. Both businesses now positioned to grow and thrive. So it's really exciting about the opportunity there. We are looking to unleash and really unlock value with this announcement. This is really an outcome of our portfolio management. We actively manage our portfolio. It's something I talk to investors often about. It's a critical strategy for us. We use active portfolio management to really prioritize where we invest organically. We use it to decide where we make acquisitions. And importantly, we look continually at how to create the greatest value from our broader portfolio. Should we manage our businesses differently? We have taken actions to divest businesses, and now we look at it as really an opportunity to create value by standing up a standalone healthcare business. And interestingly and importantly, we have put a lot of focus on the healthcare business in our portfolio management, in our organic investments, in the acquisitions that we've executed, Acelity and M-Modal in 2019, and also in the divestiture of our drug delivery business, and now the separation of our food safety business that we expect to complete here in the third quarter. So it's been a result of a careful consideration around that strategy. The leadership team, together with the board, really coming to the conclusion that the best way to create value is to spin our healthcare business. It's ready to be a successful standalone company.
So basically, it's all about unlocking value, meaning that 3M thinks that their healthcare business will do much better on its own as its own publicly traded entity away from the parent company. So basically that means they're going to get a distinct management team that's going to be able to target, allocate capital, and focus on growing that healthcare business without having to run it up the flagpole and get management's approval from the conglomerate parent. And investors will be able to choose if they want to invest in both companies or if they would just prefer to invest in something like their healthcare business. 3M is expected to keep a 19.9% stake in the tax-free spun-out healthcare business, and 3M will retain responsibility for non-healthcare related litigation, including those related to combat arms earplugs and the forever chemicals PFAS. New 3M will remain a leading global materials science innovator, while healthcare will be a leading global diversified health technology company. So we covered the food safety business that they are combining with Neogen and getting rid of. That was about 4% of the healthcare business, and about $400 million of 2021 revenue will be departing. That was attributed to the food safety business, so this is definitely not a core segment. The healthcare business will be focused on wound care, oral care, healthcare IT, and biopharma filtration, and had about $8.2 billion in 2021 revenue, not including the food safety business. So on its own, it's going to be a mid-cap company, and mid-cap companies are those that have a market cap between $2 and $10 billion. So the new 3M, which means the 3M without their healthcare business, will be focused on science and technology, manufacturing, global capabilities, and iconic brands, of which, check it it out, they have over 60,000 brands in their portfolio. And new 3M had over $26 billion in sales in 2021, which would make them a large cap company, meaning a company with a market cap of over $10 billion. So what does this mean for 3M and the healthcare business? Are they going to be able to grow as separate entities? Well, I want to look at an example of Abbott and AbbVie, which are about to hit their 10-year anniversary on January 2nd, 2023. So Abbott split off AbbVie because Abbott wanted to be a medical products company while AbbVie was to be a research-based global biopharmaceutical company. Since they started trading as separate entities on January 2nd, 2013, Abbott is up 299%, while AbbVie is up a whopping 525%. Now, the combined dividends of Abbott and AbbVie are greater today than at the time that they were separated, and they both have continued to raise those dividends. 3M says they anticipate that there will be no changes to the company's capital allocation priorities through the completion of the separation. So when the healthcare business is fully spun out by the end of 2023 is when they say this is going to happen. We're going to get more details, but I fully suspect that they are both going to be paying a dividend and probably have something similar to like what happened with AbbVie when they were spun out of Abbott. So until then, I'm going to keep holding my 3M shares, and if that new healthcare business does not pay a dividend, I'm likely going to exit that position. I would love it if you would share your thoughts in the comments below about what you plan on doing with the healthcare business, especially if they were to not pay a dividend right out the gate. Are you going to keep them? What are you going to do? So as we saw, the healthcare business is going to have no exposure to the litigation that 3M is facing. And in this itty bitty teeny tiny box right next to my head, I did a video where I briefly touched on the different litigation situations that's facing 3M. So if you click that video right here, I will talk to you there.